welcome President Lagarde to this third monetary dialogue in 2023. Our monetary dialogue today is again taking place in a still challenging environment marked by uncertainty, inflationary pressures, and the deteriorating economic outlook in the euro area.
Looking further ahead, economic momentum is expected to pick up as consumer spending and real incomes rise, supported by falling inflation, rising wages, and a strong labour market. Our latest staff projections forecast growth of 0.7% in 23, 1% in 24, and 1.5% in 25. Headline inflation continued its decline from its peak in October 22 last year, reaching 5.2% in August, down from 5.3% in July. Energy inflation ticked up in August from its downward path, but remained negative at minus 3.3%. Food price inflation has also come down from its peak in March, but is still high, standing at almost 10% in August. Inflation, excluding energy and food, fell from 5.5% in July to 5.3% in August. The contribution of profits fell for the first time since early 2022. Our latest staff projections show that inflationary pressures are expected to moderate and that inflation is set to reach our target by the end of 25. It is projected to fall from 5.6% in 23 to 3.2% in 24 and 2.1% in 25. We remain determined to ensure that inflation returns to our 2% medium-term target in a timely manner. Inflation continues to decline, but is still expected to remain too high for too long. To reinforce progress towards our target, we decided to raise our key interest rates by 25 basis points earlier this month. Let me now very briefly turn to excess liquidity, which you have chosen as a topic for today's hearing. The surplus of funds over minimum reserves is referred to as excess liquidity. The funds are held as overnight deposits with the euro system, remunerated at the deposit facility rate and exceed the level of minimum reserves, which are now remunerated at 0%, decision we made in July. The amount of excess liquidity has decreased by more than 1 trillion euros over the past 12 months. This is not a trivial issue, and it has implications for the way we implement monetary policy. It is also an issue that is relevant for all major central banks, as the environment in which we operate has undergone fundamental changes over the past decade. As the energy crisis fades, government should continue to roll back the related support measures to avoid driving up medium-term inflation pressures. At the same time, fiscal policies should be designed to make the euro area economy more productive and to gradually bring down high public debt. A robust economic governance framework is overwhelmingly in our common interest. Agreement on the reform of the EU fiscal framework should therefore, we hope, be reached by the end of this year. An illusion or an agreement without...
We are chosen by the ECON Committee coordinators.
Inflation continues to decline, but is still expected to remain too high for too long.
E por isso quero perguntar-lhe, quando decidem esse aumento das taxas de juros, têm em conta as condições sociais das famílias europeias mais sobrecarregadas? Essa palavra da sua parte é muito importante.
How do you tackle the major privacy concerns if you ask for a transition and holding limits and identification with the consequence of total traceability?
Doesn't that indicate that interest rates have not risen far enough to break this core inflation pressure?
Which, maintained for sufficiently long duration, will make a substantial contribution to headline inflation continued its decline from its peak in October 22